Hey everyone, and welcome to The Explainer. Today, we are on a mission to crack the code on one of life's biggest financial puzzles, getting a home loan.
I mean, it's a huge question, right? It can feel so overwhelming. The rules seem impossibly complex, and the requirements can feel like a total mystery. It's kind of like trying to solve a puzzle when nobody gave you the picture on the box.
But here's the thing. The answers are all there, just hidden in plain sight inside the official lender guidelines. And that's what we're going to do in this explainer. We're going to decode them together, step by step. So you ready? Let's dive in.
Okay, first things first. Our first part of the code is all about the basics. What kind of property and what kind of loan are we even talking about here?
To unlock this, we've got our very first key, a simple little phrase to remember. Fred loves small houses. Now, I know, it sounds a bit silly, but trust me, it is the perfect way to remember the rules about the property itself. Let's break it down. FR stands for Freddie Mac, and they deal with standard residential properties. Simple enough. E is to remind us that they exclude certain things, like co-ops and most manufactured homes. D is for the kinds of homes they do like detached, attached, and condos. And finally, S stands for small, meaning properties that have between 1 and 4 units. See, pretty straightforward.
All right, let's keep building on this. We've got the property type figured out. Now, we need to look at the person applying, and that's you. Think of this next part as your own personal financial report card.
And the first big number on that report card is this one right here, 620. Generally speaking, this is the minimum credit score that lenders are looking for just to get the conversation started. It's kind of like the gatekeeper number.
But, a score isn't the whole story. So, our next key helps us understand the full picture. Good credit pays daily. This phrase covers your entire credit and debt situation.
Let's see how these pieces connect. G is for that good credit score we just saw. C stands for a clean credit history. We're talking no recent bankruptcies or foreclosures. P is all about your payments, specifically how your monthly debt payments look compared to your income. And D for daily is a reminder that this balance, your debt-to-income ratio, is a constant factor in your financial life that lenders are going to look at really closely.
And let's just quickly define that term, DTI. It sounds technical, but it's actually super simple. It's just the percentage of your gross monthly income, that's your pay before taxes, that goes toward paying all your monthly debts. Think car payments, student loans, credit cards. It's just a snapshot of what you earn versus what you owe.
Now, lenders look at your debt in two main ways. This first bar here is your front-end ratio. That's just your potential housing costs. The target for that is around 36% of your income. The second bar, that's the back-end ratio. That includes your housing plus all your other debt. For that one, lenders are hoping to see a target of 45% or less.
Okay, so we've covered the property and your personal profile. Now for the part everyone thinks about first, the money. Let's get into the all-important math of down payments and something called mortgage insurance. And of course, we've got a key for this section too. To unlock the money rules, just remember this little phrase, down low, PMI high. This explains a really important relationship.
Here's how it works. Your down payment percentage is a huge deal. The higher your down payment is, the lower your loan-to-value ratio, or LTV, gets. And a low LTV is great, because that's how you avoid PMI, or private mortgage insurance. Now, this isn't insurance for you. It's an extra monthly fee that you pay to insure the lender, just in case. And they require it if your down payment is on the smaller side.
So what's a small down payment? Well, it might be smaller than you think. For certain programs, especially for first-time homebuyers, the minimum down payment can actually be as low as 3%. But here it is, the magic number that decides if you have to pay that extra insurance. If your down payment is 20% or more, you generally do not have to pay PMI. If it's less than 20%, yep, you almost always will. It's a very clear line in the sand.
We're almost there. We've covered the type of property, your credit, and the down payment. This last set of checks is all about verifying your financial stability and the actual value of the house. For this final stage, we have two quick keys to remember. For your job history, it's income checked before closing, and for the property itself, it's Freddie Values Safe Homes.
So what do these mean in the real world? Well, ICBC just means the lender is going to verify that you have a consistent and continuous income history, usually for the last 2 years. And Value Safe Homes means the property has to get a professional appraisal. This isn't just about the price, it's to confirm the home's value.
and to make absolutely sure it's safe, sound, and structurally intact.
And with that, we have now decoded every major part of the mortgage puzzle. We've collected all the keys along the way. So now it's time to put them all together into one master key, the ultimate cheat sheet.
And here it is, Fred C. Diaps. This one phrase, believe it or not, is your master key. It summarizes every single core component of the Freddie Mac mortgage guidelines we've been talking about.
This table shows you exactly how everything we've discussed fits into that official framework. You can see the big topics we covered: loan types, your financial requirements like credit, your employment history, and the down payment. And you can see how those topics break down into those finer details we talked about, like the appraisal and income stability. So don't think of this as something new to memorize. Think of it as the master blueprint that proves you now understand all the essential pieces.
You see, the mortgage process doesn't have to be some big mystery. You now have the keys and you understand the code. So the only question left is, what's your first step going to be?